quickly we pull up this table for you where you can see the difference between day traders and trend traders. Basically, day traders being intraday players and trend traders actually go over multiple days. They of course have larger profits and larger losses. They have lesser number of trades as opposed to the day traders who do multiple trades and are always looking at small amounts of profits and losses. The other important thing is that day traders basically look at 5-minute, 30-minute and 60-minute charts. So the duration of the period on the chart is much smaller for the day trader as opposed to the trend trader who looks at the daily and the weekly charts. The indicators are pretty much the same for both. So you'll be looking at moving averages, MACD, RSI. If it's a gap up, gap down strategy, you're looking at that. All of that is the same, but it's just the two time periods vary for both. And of course, day traders trade a lot on news, on rumors and breakouts. So for them, gap trading is also very, very important. Whereas on the other side, trend traders basically look at patterns and they are looking more at trying to analyze long-term trends. So that's it. That's the difference between the two. Pick the one that you like, the one that suits your personality, and the one that you can do best. But at this point, let's just pause for a minute and think about how we actually go about picking stocks that we want to trade. Just think about it. You know, how do you pick out those 10 or 15 stocks out of a total of 5,000 or 6,000 stocks that you might have to choose from? And there's a simple answer for that. It's called a stock screener. And it's just like a sieve. They sift out the gems from the rubble. And here's what a potential stock screen could be. So if I do that, you could do that on your software. There are a lot of websites that let you do that as well. So you say, show me all the stocks that are trading currently above the 200 DMA or the 200-day moving average, along with a rate of change which is more than 0, which means basically it has an upward moving trend, and it has a MACD of greater than 0. So you can set parameters on that and make a screen. Would this be a good screen, Doc?
Most certainly. What you're trying to achieve here is try and find set of stocks which are into a long-term uptrend, because you have asked for MACD which is positive, you have asked for ROC which is positive. A kind of modification that you can bring in here is to say that let's say MACD level and the ROC level should be above a certain amount of level, let's say more than 5%, more than 10%, etc. This will actually give you a list of stocks which are basically in an uptrend about 200 DMA, as well as showing you some amount of strength in terms of momentum. So you can have any sort of query which is built in as long as you have a software, and the software is very pliable for doing all these sort of things.
Lots of screen parameters that you can set there. Also, what screens do is they help you gauge the mood of the market, and that's really very important. So say you're looking once again at the 200 DMA as one of your stock screeners, and you looked at this parameter last month and you found that 40 out of the 50 Nifty stocks were actually trading above the 200 DMA. And this month, when you look at that same screening number, you see that only 30 out of the 50 stocks are trading above the 200 DMA. It shows that the market is showing signs of weakening and the trend is sort of moving down. So this is one way of assessing the trend. Which are the other parameters that one can use, Doc?
In addition to moving averages, you could probably look at momentum-based strength. See, anything which brings market down to a number, which is what all oscillators do, all the moving averages do, are very, very easy to query on a software. So you could take a look at RSI numbers, for example. Now you could do that on a daily basis, you could do that on a weekly basis. Total number of stocks which are above a certain RSI level, let's say about 60 or maybe 70. Now if this number were to increase or decrease, it gives you an idea about how the trend is playing out. Now you'll have to maintain a record of it, of course, so that you can have an idea about history. And then that will give you a very good, a fairly good grasp of how the market is moving, where the breadth of the market is. And this can give you a very good insight as to how you should position yourself in the market.
Interesting. Also, how many stocks are making new highs, how many stocks are making new lows. All these just give you little clues about which way the markets are headed. So if you're trying to set up a screen, which as we've seen is quite useful, how would it look for a day trader and for a long-term investor? Obviously, there'll be big differences between the two.
Yes, I think from a day trader's perspective, what he really needs is a lot of stocks, right? He needs newer plays every day. So one of the simplest things that he could do is look at two of the smallest parameters, which is price and volume. Now you choose, let's say, a certain amount of price move, say about 4 to 5%. A stock which changes in a day about 4 to 5%. Along with that has a volume which is maybe, let's say, 2 times the average of the last 6 days. Now this gives you a list of stocks where there is movement, fairly large range in prices, 4 4% plus, and where there is volume. So the prices have moved with volume. You know, a day trader needs to be in stocks where there is action, where there is a lot of volume going on, where there is a lot of volatility in prices, because these two elements are, absolutely mandatory if you want to be a day trader.
That's a lot of charts. It's time to unwind. A small break. When we come back, more insights into the trading world. What some of the smarter traders on the street love to do. Does it work and does it not? Total Out of the Box.